With our Federal Reserve raising short-term interest rates at the fastest pace we've seen since 1994 in order to fight inflation, one might wonder, what would an investor ever pay attention to what the Bank of Canada is doing with its own interest rate policy? Oh Canada, what can we learn from you? I'm Chris Parrish, Chief Investment Officer with Oak Harvest Financial Group in Houston, Texas. This is our investment team's midweek release. We examine a news item, headline, or story making the rounds from publicly available sources, and we ask, is it news or is it noise for your money? This week, given we are recording this segment in advance of our own Federal Reserve's December policy meeting, we're discussing if we can make anything by what other foreign central banks are doing. First off, please remember, making real economic forecasts for our economy is ripe with errors. As much as folks on TV and in colleges throughout the Ivy League would like you to believe otherwise, the study of economics is an art. It's not a science. There are no set in stone rules in the real world economics like there are in the classroom. Case in point, I want to take you back almost exactly a year ago. Back then, the majority of the Federal Reserve members here in the United States saw 3 interest rate increases in 2022. According to the central bank's so-called dot plot, the Fed would raise rates 3 times in 2022 to 75 basis points to about 1%. Of course, what's really happened this year? Including today, our Fed has raised interest rates 7 times, including 3 straight 75 basis point moves and what I'm assuming was 50 basis points today. Our Fed's target right now sits at 4.25% to 4.5%. That's 4 to 5 times their own forecast 12 months ago. This has pushed borrowing costs to a new high dating all the way back to 2008. Here are our Fed's moves this year. So why do we care about Canada's central bank moves? Well, because year to date, they've moved earlier and more forcibly than our Federal Reserve. This includes a 100 basis point increase last July. What's interesting is earlier last week, the Bank of Canada raised its overnight rate by 50 basis points to 4.25%. That was their 7th consecutive hike, which brought their 2022 total hikes to 400 basis points, now sitting at 4.25%. More importantly than what they did, it might have been their messaging on future interest rate moves. Their tone was definitely on the dovish side. They dropped any suggestions that rates needed to go much higher than 4.25%. In fact, the Bank of Canada indicated that early December move could be the last in this cycle, depending on the data. Would this be a big deal if December's global central bank hikes turned out to be it for the cycle? For sure. Here's a chart from Merrill Lynch showing the average stock return post-Fed hiking. The average 12-month index return has been positive 14%, with a high of 40% in the early 80s and a low in the 69-70 recession of down minus 11%. The final countdown for interest rate increases? Let's hope so. Let's hope we're almost there or very close. Are you trying to meet your needs or your greeds in retirement? Give us a call here and schedule an initial consultation with an Oak Harvest advisor. We'll sit down with you and help you and your family do the math to figure out if you'll be able to meet your retirement goals and needs. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs instead of focusing on the past. The future is always uncertain, and that's why our advisors and retirement planning teams plan for your retirement needs first and your greed second. Give us a call here to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals. Call us here at 877-896-0040 and schedule an advisor consultation. We're here to help you on your financial journey into and through your retirement years. I'm Chris Parrish, and for the whole team here at Oak Harvest, have a blessed week and a happy holiday.